Bitcoin up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna, the best trade idea resource out there. I'm gonna do a cold intro. I know it's a cold start. I'm a dramatic guy. Just go.
What Luke doesn't know is that we can hear him.
But come on.
April Fool.
Yeah, I was trying to build some drama, producer AB, okay? All right, look at this. The hat is back, baby. Dow 100 Thou. The hat is back. It's on. Let's go. We are ripping and roaring. All-time highs in the S&Ps. Let's get it, baby. If you guys recall the line that Ripster was watching, Ripster47, again, let me get my screen on here in a second. But Ripster47, great follow on Twitter. The line that he was watching was there it is. Boom. All right, the line he was watching. 398 on SPY. That was his number. He says if we get April above 398, we are looking good. Here are the minute candles. We are at 399, 400 in sight. Will we get there today? I don't know. The trend looks pretty damn good. Looks pretty damn strong. But what's up, everybody? Happy Thursday. Last day of the week. Shortened trading week. Let's rock it and roll it. Let's rip and roar. But again, Dow 100 Thou hat. It's out with the special. And producer AB popped on for a second. I think he didn't think I was going to show up or something. What's up, Aaron?
You know, just hanging out, watching my positions today. How about you?
Same thing, man. All right. Should we just dive straight into it?
I'm down. Let's do it.
All right. So everybody, we have some time today, okay? Again, I still don't have my J Raz. Maybe he'll make a guest appearance. I don't know. But I was just on Twitter shooting out some DMs, looking for some folks to bring on with us. But if you guys have stocks to talk about, drop them in the chat. We will get them queued up. We'll have some time today on my radar. Let's continue the Palantir talk, right? We've been tracking Palantir. Big day yesterday. We do have the option position in it, so we'll do that one. Leslie's, the chart looks beautiful, so I want to talk about that. Trimble, that's a trade that I got into on Tuesday with Mr. Drew. We got into that Trimble trade, TRMB. So we'll take a look at that. Maybe take some action on that trade while we were on the show. And a couple guests that we have coming on with us today. We're going to have a crypto VC fund. Right. So a VC that's investing in crypto companies. Super interesting right now as we head into that Coinbase IPO and also cough. Voyager all-time high. Let's go rip it and roar it, baby, on the Voyager Digital. That's one that helps the portfolio, right? Again, I've never had an unrealized percent like this. That's not normal. That's very abnormal. But so we'll talk about that. We'll talk about some of this crypto VC investing. At 1 o'clock, Moses from Ruby Capital is going to be coming on with us. Talk macro, talk markets, talk. Hey, SPY is up to this 400 mark. What's going to be happening in the future? And of course, guys, chat challenge. We got to go through our chat challenge. That's where every week we're asking Zinger Nation. That's all of you out there in the chat. What is the best small cap stock of the week going to be, the best performer? Because even though our SPY is at all-time highs.
Wait, holy cow. Someone in the comments is talking about Playboy all-time high. So I just looked it up. It's up 23% today. What happened? Did people like just now discover Playboy or something? It's up 23% today.
NFTs, dude. I bet.
Oh, let's go.
No, you got an upgrade. Okay. So okay, this is a great article. 16 stocks being perceived as NFT plays that may or may not have anything to do with NFTs. Playboy is one of those stocks, right? It sort of makes sense, the story for Playboy and NFTs. And then check this out. My trusty Benzinga pro.benzinga.com 2-week free trial. No reason not to do it. But check this out. Canaccord Genuity initiating coverage, buy rating $28 price target. So that's what's giving you the lift today. I bet that is the first analyst who's out on the stock. Let's take a look here. We go to analyst ratings. No, it's not. You also have Roth Capitals has covered it before.
Oh, George Kelly. George Kelly's on there twice. He really likes Playboy.
He really likes Playboy. But Canaccord's second firm out on it. So you got Roth Capital. They have a $26 price target. Canaccord's second firm, street high price target. If you guys ever hear that term, street high, when they're talking about analysts and analyst involvement in a stock, it basically means that they have the highest price target or the highest estimates on the stock, depending on what exactly that they're referring to.
So would it be safe to say that Kathy Wood has a street high target price on Tesla?
Yeah, but it's, if we want to get technical with it, I don't know if you're asking facetiously or not. I'll take the question literally. Here's our Tesla chart for 2 days. I always like my 2-day charts. But when you hear like somebody saying street highs, right? Whether it's for an estimate or a price target, typically what folks are referring to are the sell side only, right? Kathy Wood on the buy side. I guess we can do this one too, right? What's the difference between buy side and sell side? It's terms that you hear. If you don't know what they mean, I'll go over them in 18 seconds on the clock going now. All right. Buy side, that means you're an asset manager, right? You buy and you hold positions. You speculate on the price. There's buy side. Sell side, that means you are responsible for helping the buy side get a hold of those assets, right? So when you hear about an investment bank, right, selling businesses or a trading floor, those are all sell side because it is their job to help get these investments in the hands of the buy side. So there's your distinguishment there. The sell side firms, why do they produce this research, right? Let's look at just Tesla as an example. All right, we go look at their analyst ratings. We're looking at Jefferies right now. Why does Jefferies spend the energy to come out and put a rating on Tesla? It's like a thought leadership thing. Basically, they say, hey, hedge funds, we're going to put out this really good research on this whatever basket of stocks it is that we want to cover. And we will send you this research free of charge if you let us sell stocks and companies or whatever it may be to you. Right, if you're buying a whole company, if you're more of like a PE type play, or you're a fund, hey, let us get your shares. You want 1 million shares of Tesla? Hire us to go out and find those 1 million shares for you. So that's the deal there.
Got it. I don't know if that was quite 18 seconds, but I'll take it.
Yeah, was that long? I might have gone a little long. All right, and grabbing some tickers out of the chat, putting them on the trusty notepad, guys. Let me just take a second to write these down. NDM RE.
And NDM, another Kathy play.
We'll do Voozy. And you already sniped PayPal. All right. So there we go. We've got a couple of them on the list. Let's warm today up. And I've got a sneak peek to show everybody. I have something that not even you have seen yet, producer AB. You want to start there?
Yeah.
I love
surprises. Let's do it.
All right.
Is it a new page?
It's a new page.
Oh my God.
Page is not up on the site yet. It will be going up on the site later today. I've got sort of like the backdoor access, right? Backdoor guests are the best or something like that.
Whoa.
But all right. No, that's a sign that my mom has at the house.
Oh.
You going through the back door, you know what I mean? This is like my backdoor access to it. Did you get it, right? Like
no, I get it.
Don't come in through the front, right? Your backdoor guest. You're like, you're very friendly. But check it out. Air horn for. Oh shit! I don't have sounds today. Oh, there it is. Okay. All right, air horn. First air horn of the day. FDA page up live on the site now, guys. So what is this? This is our first foray into building you guys better FDA tools that you can use basically to keep track of catalysts, right? If we go ahead and we look at any given day, what are the biggest gaining and losing stocks? I'm going to pull it up live today. I haven't checked yet, but I am willing to bet that a lot of these stocks in this list are biotechy type stocks. So let's see. All right, here's the list, right? These ones aren't. Then you have 1, 2, 3, let's see, 4, 5. So about half of the biggest gainers and losers in the market today are biotech stocks. It's like that every single day because they have, basically they have binary decisions, right? That they're working on these drugs. The drugs are either going to show good data or they're not. There's step one. And then step two is the FDA, the Food and Drug Administration, is either going to approve these drugs or the drugs are going to get rejected. That's the reality of these stocks. I specifically don't trade these stocks because I don't think that I have any sort of competitive advantage to know, hey, is this company's phase 3 results? Are they going to meet their endpoints? I don't know. But that's the deal there. And so what we have to keep you guys protected, give you catalysts to trade on, is we have now a database of all the upcoming FDA events. So check this out, right? If we look here, we can see, okay, what's the 4/6? Is that next Monday, I'm guessing? 4/6, next Tuesday. So we know this stock, TMDX, it has an FDA approval date for their organ care system called OCS Heart. And basically, if that gets approved by the FDA, stock is going to go up. If it gets rejected by the FDA, stock is probably going to go down, right? And if we scroll further into the week, right now we're looking at the 10th. These are the next big events that we have. We can see all these stocks that are having data presentations, and then we actually have notes as to whether or not this is new data that they're presenting, or if they're basically doing a recap of the data that already exists, right? And there's a ton of companies, it looks like, presenting at this event. So that's the deal there, guys. FDA page now live, or I guess it will be live later today. And so I'm going to make the ask to Zinger Nation. If you guys trade these stocks, you care about these stocks, you like these stocks, hit the email address powerhour@benzinga.com. Again, that's powerhour@benzinga.com. I want to send you all the links so you can try it out, check it out, and then give us any feedback on it, right? We're only building this page because we want this to be the best and the most informative FDA catalyst page on the internet, on the market, whatever it is. It's a free page. Anybody can go use it. But shoot me the email address. This has been my pet project for like the past 2 weekends. I've basically only worked on getting the data in line, the page in line, etc. So drop the note, powerhour@benzinga.com. We will get this sent over to you, and you will be the first one to see it and make suggestions. How's that sound, producer AB?
I think it sounds great to me. I was actually going to ask you because I know in the past you've kind of equated trading biotech stocks to go into the casino. Like it's something that you kind of stay clear of. So I didn't know if maybe that'll change.
Sure, those were not the exact words that I used, for the record, but keep going.
All right, maybe it was more about like specifically a roulette table.
All right, keep going.
I'm just saying, I'm curious if now that we have this page, maybe that'll make you more inclined to trade some of these stocks because you have some more information on them now.
Wow, we have nice music in the background. That's interesting. Okay.
Yeah, that's real. I asked Rohan. I said I thought it'd be nice for like a shortened week, like a little lighthearted music for this Thursday.
I want some lo-fi. I want some high energy.
All right, Rohan, no more lo-fi.
Like some black metal or something. Yeah, keep working on that, producer Rohan. But yeah, okay, it's a good start. But no, I still personally do not trade these stocks because again, it comes down to a binary event. And I don't think that I have any sort of competitive advantage for that binary event. If we go ahead and we compare that to something like a Voyager Digital, right? I'm going to use the same example that I always use, but it is at an all-time high today. But if we compare that to a Voyager Digital, right? There's basically no analyst coverage of that stock, and there's a lot of information that comes out of the company, which you can use to back into like, hey, what are earnings going to be this quarter, right? And you can come up with your own sales and EPS estimates. That's a place where I think that I have a competitive advantage because I don't think a lot of people are doing that sort of work. With these biotech stocks, I mean, they're testing some new molecule to decrease cancer or like, you know what I mean? I have no idea. So that's why I don't trade these ones in particular. There's a lot of folks that I talk to that love to buy these ones into the announcement. I think that's an interesting strategy, right? So for example, this TMDX, we know they're going to have the FDA approval is going to be a yes or a no on the 6th. So maybe you trade the stock into that, because oftentimes you'll see these stocks run up into the announcement. So that could potentially be an avenue.
Yeah, I know I kind of got burned once when I was really young trading buyout. So when I was 16, I had most of my money that I had saved up from working as a kid and stuff invested in Apple stock. And it was pretty good decision to be invested in Apple stock at that time from 2010 to 2013.
Yep.
And then I just started getting into trading stocks. I'm 16. I read this article that this company Bluebird, the ticker is Blue, BLUE.
Bio, I know it.
Yeah, and I read an article. This was in 2013 that they were had a drug that was going to cure cancer, all this stuff. So I was like, "Oh, Dad, I got to sell half my Apple stock and put it into Bluebird." He's like, "I don't think that's a good idea, but fine, let's do it or whatever."
How long ago was this?
This was go to max. You have to go to or at least to 10 years. This was in 2013.
All right, here's your 10. All right, we'll go to max. So they IPO'd in 2013.
Or maybe it was all right. It was somewhere on that. Maybe I bought it in 2015 on that top of that green candle, and I lost half my money on it.
I picked it. You were the highest trade.
Yeah. And I was like, you know what? Never again. I'm not buying into these, articles that I read saying that Bluebird's going to cure cancer or anything like that. I'll stick to my apples, to my, the stuff that I know. So yeah, that was kind of a one and done for me on the biotech train.
Have you ever top ticked a trade?
I have. Bought at the very, very top.
You're the wick on that candle.
I think I mean, I might have been here. For some reason, I thought it was when I was 16, which was in 2013, but maybe it was a couple years later. Maybe it was when I was 18 in 2015 when I could actually trade for the first time. Maybe that's when it was. But my Lanta. Yeah, this chart's ugly.
Kodak. All right, we'll look at Kodak in a minute here. I almost top ticked GME. I was pretty close. Within 10 minutes or 5 minutes of the top trade. And it was early in the morning. It was 5 a.m. So there weren't a lot of trades between me and then.
There was one of the big runners from over the summer. I did very much that. I think it might have been Workhorse or something. I was like, okay, yeah, this makes sense. This is gonna be the next Tesla or whatever, and then bought at the very, very top.
Yep. All right, but before we go ahead and we bring our first guest on in a few minutes here, just gonna give a quick recap of what we have up ahead of us for the day. And guys, I'm gonna make the ask: smash that like button. Again, if you want early access to that FDA page, our FDA database, upcoming catalysts, it's powerhour@benzinga.com. Again, the email address is powerhour@benzinga.com. That's where you reach out to if you want to access that. And again, like the stream, share the stream.
I just put the email address in the chat, but I did it wrong. There's not 2 O's in com.
Okay. Yep. That's fine. All right. Other things on the radar today, guys. We have a lot of stocks to talk about. We're going to get back to SPY. We're going to talk about just SPY, S&P 500 market in general. We're also going to do Trimble. We're going to do ticker EBS. Look at that chart. That's an ugly one. EBS, Echo Bravi Sandy. We're going to do Palantir. We're going to do Leslie's, NMDM, Vuzi, and Kodak at the very least. That's what's on the docket right now, guys. But without further ado, I see our guest in the waiting room. I don't want to keep him hanging out too long. Tall, welcome to the Power Hour.
Thank you.
We are honored to have you here. I gave a little bit of context before you hopped on, and basically said we're going to be talking crypto VC. But I'm sure you can give a better description than that. So why don't you tell us a little bit about the fund, and then let's dive into it.
All right. So the fund is called Spice, and it invests in companies that are in the blockchain and tokenization domain, pretty much companies that build pieces of the ecosystem and are the pioneers in this domain. Companies that we believe will grow together with this domain and will make a lot of money for our investors.
Awesome. Can you tell us about some of the investments that you made, or what parts of the market, maybe it's a better question, are most interesting to you?
Right. So as a VC fund, we have a defined time period, and it's 7 to 9 years. So we're looking at companies that we can see significant appreciation of within that window of time. So in the first 2 years of the fund, a lot of our investments were related to financial industry implementations of blockchain. Some of this was purely crypto exchanges. For example, we invested in Ripio. It's a crypto provider in South America. We invested in several companies in the digital securities domain, which are basically your traditional securities world using blockchain for registering and transaction securities. But we made some other investments as we saw some other industries adopting more seriously blockchain for core businesses. Portfolio has been doing pretty well for the first 2.5, 3 years. So
I'm sure. And can we talk about Coinbase a little bit and that IPO?
Talk about Coinbase.
All right. So I want to specifically let's talk about valuation a little bit. The numbers that I heard tossed around is that the company made a debut at 50 or 60 times revenue. I mean, that seems high, but I'm curious where you're at, on the valuation side of things. I mean, is the revenue growth so explosive that within a few years, that's trading at more normal multiples? But where are you at with it?
So, it's really hard to deal with valuations, especially when you're talking about companies that are players in an industry that is relatively young and growing very, very rapidly. I mean, if you talked about Apple stock just a little bit earlier. Think about Apple stock in the early days. If somebody was talking about 50 times revenue, that wouldn't sound reasonable today. Yep. It sounds extremely cheap, right? So Coinbase is one of the key players, definitely in the US in terms of crypto exchanges. For people that believe that crypto will become much more significant asset class within financial systems, then growth is going to be significant in the future beyond what happened until now. So if you believe in this, in that future, then 50 times multiple is maybe not that high. But I think if you look at some of the IPOs we've seen over the last few months, many of them have multiples that seem very, very rich in many ways. So I think it fits. Okay.
And then in terms of Coinbase's growth, right? You're obviously involved in other similar businesses. I'm curious what you view as some of the advantages for the non-Coinbase exchanges.
So first, Coinbase and some of the other large players, I think more than anything, mark a significant acceptance, especially with institutional investors and with mainstream investors of crypto as another asset class. This was not the case 2 years ago, for example. 2 years ago, crypto was this bizarre thing that few people felt comfortable touching. I think that one of the things that exchanges like Coinbase do is they make it easier for normal people to hold crypto because you don't have to deal with all the yucky crypto interface, and you're basically dealing with something that looks like your online broker that you're dealing with stocks and bonds and so on. So it helps bring it into the mainstream, and it actually ushers a new era for other exchanges as well that until not long ago were kind of in the gray zone, more into the mainstream.
Yep. Okay. That's helpful. And I'm curious if you have opinions. And I'm asking this question for a specific reason, because I own the stock Voyager Digital, and what I think. Do you know this company?
No, I don't.
Okay, I'll tell you a little bit about it. But basically, it's a crypto brokerage is how they define themselves, not an exchange, and that it connects to about a dozen exchanges. And then allows users to basically get filled on what the currency that they want at whatever exchange has the cheapest price at that given time. It seems to me that's sort of like the futuristic model, especially for people who are actively trading, and even for people who are investing, because that price disparity does exist. And so I'm curious if you have any opinion on a business like that.
Yeah, it makes a lot of sense. If you look at today's crypto market, it's fairly inefficient, and I think it is very similar to early stage markets. It's very inefficient. You can find significant differences between different exchanges, and this is what makes this business tick, right? Voyager Digital. And it also part of what drives the DeFi industry and the growth of that industry last year significantly. And it's the ability to find differences between different exchanges, between different prices, between different interest rates, and so on. I think that as the market becomes more efficient, assuming the market continues growing and becomes more mainstream, more efficiencies will be built into the market. Exchanges will be connected to each other, and you'll find less opportunities for differences like this. But I think that for the next at least 2 or 3 years, it's going to remain a very profitable business.
Okay, awesome. And let's hop over to NFTs. Another very hot, trendy place in the market. I'm curious if your portfolio has any exposure to NFTs. If it is, or even if it doesn't, is it a place that you'd want to get exposure into the future? Is it a long term? Is it here to stay? Is basically the question, and so enough that you'd want to be involved.
So let's start with the end. Yes, it's here to stay.
Okay.
It's a very clear yes, it's here to stay for many reasons. I mean, it is really, really cool and flashy right now because it has grown tremendously. Last year, over 300%. I think it will grow. It will more than quadruple itself this year as well. There are a lot of celebrities involved in this, like Grimes and Banksy and Jack Dorsey and a bunch of others. And you see extremely high value items like the piece of art that Beeple sold for $69 million, and Grimes selling digital art for $6 million in like 20 seconds or something. I mean, this is all cool and a lot of pizzazz around it. But at the basic level, NFTs are here to stay because they solve real world problems of several domains. They obviously started from digital art, where there are real problems like proving ownership, registering ownership, authenticity, and so on. They solve issues like ownership in items like rare collectibles and so on. In assets for games, for example, this is a very rich and interesting market where rarity is significant and ownership is significant. And these are very difficult to do for digital items. And this is where it all started. And NFTs have the capability as a technology to solve a lot of those issues and smooth a lot of those transactions and make them more accessible. So if we take the pizzazz away, it's real world solutions to problems. It's making trade much more efficient in areas of art and collectibles and games. And it has many other applications that were not explored yet, like wheels, for example. Almost anything that you can think of that represents something unique or rare has application that NFTs can solve. We are more interested in platforms and in providers that enable solutions within an ecosystem. And we're definitely looking at the NFT ecosystem for potential investments. And I think for people who are interested in gaining from the growth of that industry, the place to look is companies that enable new capabilities and new applications in this domain, not just the marketplaces, but there are many other components that are still missing and will have to be developed over the next few years, both from a technology standpoint and from a service standpoint.
Awesome. And I, going off of like you're talking about ecosystems and some of the real world problems, I see a company in your portfolio, lottery.com. And that's actually one that I got connected with really early on. I think when they were just getting started, I met Tony maybe in New York or something, like back in 2016, 2017, pretty early on into their business. It seems like blockchain technology could be a very futuristic solution for managing lottery. So I'm if nothing else other than just for my own interest, what's going on with that business, what's interesting with it, etc.
It's actually very, very interesting. It's going public, the New York Stock Exchange. They're doing extremely well. Actually, Lottery.com used blockchain mainly for fundraising in the early stages of the company, rather than run the day-to-day business. The day-to-day business of operating lotteries is a very interesting and complex business, but this is not where they're utilizing blockchain the most. Okay,
got it. And then any other thoughts? Any other words of wisdom? Things we should leave our viewers with? Places that they can stay in touch, etc.
So obviously, if people are interested in blockchain and in real life applications and how to benefit from the growth of this domain, it's really hard to do it by investing in individual companies. Most of them are early stage companies, and it's very, very hard to separate the diamonds from the rest of the pile. So investing through VC funds or through funds that invest in this domain is what I would advise. And spicevc.com is a place to look at what we do. And you can go into our blog and see a bunch of articles that we published on different domains that relate to blockchain. Happy to talk to anybody that is interested.
Awesome. Tal, super interesting conversation. And I love the sort of the different conversation you can bring, right? A lot of times when we have crypto guests on, it's, hey, we're just going to speculate about the price of Bitcoin. But I love that, you're able and you do, that's what you do all day is you really dig into these businesses and the applications. So thanks so much for joining us today.
Thanks for having me.
Absolutely. All right, guys. How about that? In the lottery.com one that I mentioned, check this one out. I'm going to share my screen here. Boom. There it is. Look at that. All the way back in 2017, I met those guys. And now I got the ticker. Somebody threw it in the chat there. I think it was Chris Catchy. SPAC Attack. What was the ticker that he put there? TDAC. SPAC deal going public. There you go. You never know, right? I think it was they had literally just purchased the domain lottery.com at that time when I met those guys and we're getting the business up and running. So Very cool. We'll have to get in touch with them. Chris, if you're not already having them on SPAC Attack, I'd love to have them on to the Power Hour. And, it'll be like a 4-year reunion. So, all right, guys. And for everybody just joining us today, let me give you a little bit of a preview as to what we have going on for the next, let's see, 80 minutes left. So, all right, we've got a handful of trades to talk through. We have Trimble, we have EBS, Palantir, Leslie's, NNDM, Vuzi, and maybe even Kodak. We may or may not come up with Kodak. We'll see there. I see some speculation in the chat that they might be throwing some dollars into Kodak. It's running again. I've got strong opinions about this stock, so we'll get into that one. Of course, if you have other tickets for us to look at, drop them in the chat. Hit the like, share the stream, and we've got a very special guest who's about to come on with us. We're going to talk about everybody's favorite stock of 2021. Rod Alsman, GMEDD.com, back on the Power Hour. And Rod, between the last time you were on and now, a few things happened, right? We had
there are no halts. No halts today. Every time you guys have had me on, there have been halts.
Well, we'll see. There might be some halts. Who knows, right? Maybe some interest gets drummed up. And I got a new soundboard too.
Oh yeah?
Yep. Oh, but we can't hear it. Okay. I tried. But what's up, man? How have things in your world been?
A little more calm for me because I'm just living the Theta Gang life for the most part when it comes to my GameStop positions.
So last time we chatted, basically you were just selling a ton of premium and puts against GameStop. Is that still the move?
Yeah, I've got a bunch of cash secured puts like we've talked about. I am actually in the midst of doing some ACATs from Vanguard over to brokers that actually let you do multi-leg options trades, because what I'm trying to do is roll up the strikes on some of my CSPs because I have them down at like 30, 40, and to be honest, I think my bear case has gone up with all of the incremental new hires that they've brought aboard. I think that the execution risk of this transformation is lower because of all the talent that they're bringing on from Amazon, from Chewy, from all over the place. So I'm trying to raise the amount of premium I can bring in on those because the implied volatility is still so high that you can write these and happily take possession of the shares at whatever strike you deem a good entry point and get paid to wait in the meantime, even with the price near 200.
And the premium, I imagine, is insane, right? That you're collecting on these.
Yeah. If you were to say, I mean, it's really just crazy because the implied volatility is just still in the nosebleeds, and the historical volatility has been in the nosebleeds too. But like if you were to look at, say, I don't know, April, well, obviously April, we're in April now, but look at July or even if you looked at the January 22 stuff, you can get paid using January 22, for example.
So you're way out. Okay. So I have the option chain up. Let's look at the put. Holy crap. Holy crap, guys. All right, I'm gonna slow you down for a second, Rod, okay? And I just want to explain this.
Yeah.
For let's talk through why I'm having this reaction, and let's see. All right, there's a new soundboard sound. I'm just pressing them randomly throughout the week. I hadn't tried that one yet. I'm down with it. But all right, so check this out, guys. We are looking at the option chain in GameStop, ticker GME. We're looking at the January 2022 put. So that's 295 days from now. These contracts are selling for if we look at the 190s, which is pretty much where the stock is at right now, $95. Okay. So basically, if you are buying these puts, if you're making the decision that I'm going to throw down, what is that, $9,300 to get this short exposure to GameStop, you don't start making money until the stock is at 95, right? About half of where it is now. If you want to go the other way, right? And again, we're using the strike price that the stock is at right now as an example. You want to sell puts, which makes you synthetically long the stock. You're going to collect $9,300 today. And you start losing money when the stock is at 190 minus 95, which is about $95. So holy crap, are these expensive? I mean, this is like unheard ofly expensive.
Yeah, I think I shared it on one of the other times you guys had me on. The implied volatility when we were in the middle of that squeeze in January was the highest I've ever seen on any security in my life. We saw 4-digit implied volatility. Like, I didn't know it went that high. I mean, literally IV over 1,000%, which is just mind blowing. And it's still really high. Like the IBKR is showing you right there, 144. I'm looking at Schwab and they're saying 150 for the at the money put. So I guess that 144 must be a mix because there's still a 10% spread in favor of the puts premium to calls. But your point, Luke, regardless, is, for example, you could write that 190 and your break even is under $100 if you wanted to buy GameStop, lock in prospectively buying GameStop if you think that, that those prices make sense to you, right?
Yeah, I mean, this is crazy. So even if you went down to $100, all right, let's do one more example, right? So we're talking about $100 strike price. The stock is at what, 190-ish, 188, something like that. Let's get a last print here. So the stock's at 187. Okay, the $100 puts. So if you're buying these puts to be short the stock, you don't even start making money until it's 65 and below, and you've got to lock up $3,500 today. And if you're selling them, you get $3,500 today, and you're committed to buying the stock for 100. Which
well, you'd lock up the cash amount, right? So the $100 strike. So you'd lock up 100 shares times $100. You'd lock up the 10,000 less the premium you got. So you'd receive the 35 or 3,600 in premium. So you'd really have about that 400 that you'd have to have. Securing it. Obviously, if you're in a margin account, it's different. But let's just
I was going to say, just throw it to margin. Interest rates are low.
Yeah, but obviously, there's a lot of risk, right? Like we all can appreciate that the price is still relatively elevated when we look at trailing financial results. But it goes back to what I was just saying, and I think what folks are coming around to. I think Kramer was talking about it the other day that. Ryan Cohen is building a dream team. I think that was his term precisely. And it's hard to argue when you have these talented senior leaders from these tech giants going over to GameStop that they're not going there because they think they're joining a failing blockbuster. They're going there because they clearly have bought into a vision that he's communicated to them in private. And I have no idea precisely what his plan is beyond what he's publicized, right? But there's clearly a lot of excitement when you're getting all this top talent to come over. And it's really tough to evaluate the company because if you look at trailing financials, it's really irrelevant given the console cycle noise, all of the COVID closure noise for them as a physical, legacy physical retail business in 2020. So it's clearly a very polarizing stock still, as evidenced by the IV levels.
So let's talk about some of that management transition. So how many former Chewy execs or other tech execs have they brought over? What are some of the important roles here? Help us read between the lines a little bit.
Sure. So and I'm not taking all the credit, it's a team effort, but at gmedd.com, we've really been trying to stay abreast of all of these actions, and you could check out the site and kind of follow the recent updates. Just on March 30th, so just a couple days ago, we had announcements of a chief growth officer that was brought aboard, Elliot Wilkie. So he joined them from Amazon, where he'd had senior roles across the Amazon Fresh, Prime Pantry, and their worldwide private brands. So are we going to see more white label GameStop related accessory or other toy products? We'll see. So we've got that chief growth officer. I think that's a space that makes a lot of sense as they've tried to grow into the PC area. We've heard about them rolling out these different where you can build your own PC at a GameStop store. They've done some test stores on that. And PC gaming is a space that they had really abdicated for a while. And they, even before Ryan came, got really involved, George Sherman and the team had pointed at PC gaming as a growth opportunity. So I think we'll see more in the line of white label of, especially in PC parts and components. We had a announcement of a VP of brand development who had been Chewy's VP of marketing. We had a VP of merchandising who had been Chewy's VP of merchandising. So it's really a lot of old Chewy folks and Amazon folks. Again, if you're poaching Amazon folks, like I don't think you're pitching them, that we're going to be the last blockbuster.
Yeah, exactly, right. If they're choosing to leave the rocket ship that is Amazon.com, right, or they've already left it. I mean, they've seen what kind of wild ride that is, and obviously they thrive in that sort of an environment. But what did you think of the conference call, the earnings report and the conference call? I was disappointed personally, right? The no Q&A. First of all, I couldn't even get in it at first because it was full. That was annoying.
You had to
right?
join literally in the morning, and folks who've been following GameStop long enough knew the same thing happened in the third quarter, where people got locked out. Unfortunately, yeah. Sorry, Luke, didn't give you the heads up on that.
Well, thanks. So it's all right.
It was disappointing.
We did restream it on our channel for that purpose. So somebody here on the Benzinga team got in or was registered on time and then was able to restream it. So that way anybody who missed it couldn't. But yeah.
Yeah, look, it was very, I think, disappointing. It's hard to argue it wasn't, right? We wanted to, I say we, I think most every investor and even just media folks wanted to know what the hell's going on a little bit more clearly. And if you look at the press release, that they just let George Sherman, stick to the script, and they opted not to field any Q&A, which was very disappointing because they were supposed to in January tell us about their strategy going forward at this ICR industry conference, which they were supposed to present January 13th, I believe it was, whatever that Monday was at that conference. And then that same day, that same day, they had the settlement announcement with Cohen and adding the three Cohen and his two former Chewy guys to the board. So I think it was one of those, well, why are we going to go talk about, George Sherman's strategy when we've clearly gone in a different direction? But we still haven't really heard much detail. They gave us in the release, like, here's what we're looking for in 2021. And there's really a lot of talk about the customer, talk about technology and digital, which is all well and good, but still just a lot of meat hasn't come out publicly. But again, the price has clearly front ran that. And I think that the hires lend credence that there's clearly something going on behind the scenes.
Yeah, because I remember into the call, because you're gracious enough to join us, but before the report and the call, and basically your big thing was we want to see what the plan of attack is, and that's right. what we're looking forward to, just like the rest of the world was. We didn't get it, so I had to hang out a little bit longer. Based on the communications that we've gotten from the company since all this happened, I would imagine that at this point we're hanging out until that Q2 report and call. Is that fair, or do you think we'll get something before that?
I know something that speculative is, look, the question to me is like, is George Sherman really running the ship? George Sherman is the CEO, and he was hired. The announcement of his hiring was on March 21st of 2019, after they had concluded their previous strategic review. Yep. And if we recall, in November of 2020, Ryan Cohen had written a letter to the board and saying, well, I think we need to do another strategic review because of how much has changed in the market. And then we got this board settlement that didn't end up being a proxy fight, which we then had the short squeeze in January. And now it's still just unclear at a detailed level of how exactly they are going to shift from the legacy, core brick and mortar selling video game software that you put into a PS5 or Xbox Series X, which we all know. No one is disagreeing that digital is going to continue to take a larger portion of the pie. I think there's some disagreement on how quickly the remaining physical portion of the pie shrinks, or whether the pie itself is growing such that physical actually will always remain a material contingent there. There's clearly disagreement.
Do they own real estate, or do they lease it all?
It's all leased. So this is something that a lot of people also get hung up on, is in the US, it's about a 90% strip mall lease footprint and about 10%, think, your class A, B, whatever, commercial mall store footprint. Whereas abroad in Europe and in Canada and elsewhere, it's the inverse. So they're mostly in malls in Europe, but they're mostly in strip stores in the US. But it's leased stores. The average lease life is very short, relatively speaking. So we're talking the amount of inherent embedded flexibility for this sort of a transition is huge. And that people, there was a lease accounting change, folks maybe remember, where all the leases had to be put on balance sheets as right of use assets. And it looked like GameStop put a ton of debt on its balance sheet when people were looking at it at a very high level. But it's like, well, no, they just put all these lease liabilities on the balance sheet, which those disappear if the lease runs off. And they've been de-densifying. They closed 700 stores in 2020. People, some people
and how many are left?
It's under 5,000 at this point.
Okay.
It had been over 7,000 at the peak. So I mean, they've been whittling down that store footprint for a long time, and it's
so many. Like I think about like just operating a business like that. Like that's where my mind jumps to, and I'm like, holy, like I think that we have too much stuff going on. We've got maybe like 150 people or so here at Benzinga, and then you talk about like 7,000 stores, and it's like that's not even like their corporate, experience. It's like holy crap.
Yeah, and just to go down that path a little bit, like for years before the new team had come aboard, and we have like an interim CFO too, so it's still, again, unclear precisely how fast the go forward pace of store de-densification is going to look, but they had looked at it from a four walls EBITDA perspective, and the last thing they'd said was that like 95% of the stores were four walls EBITDA positive, which, okay, that's good and all, but the issue was they hadn't really thought about it where, well, we can close these stores. I mean, you can give you plenty of examples. You could pull up Google Maps and like look at GameStop near you and probably see like, what the hell, why do I have like 4 GameStops within a 10-mile drive? But what they've been doing is closing stores that are duplicative, and they are realizing a 40% plus transfer rate is what they'd been discussing most recently. And some analysts have thought it could even be higher now because of the work they're making in e-commerce. But it's like, okay, well, I lose, 60% of those sales, but I'm taking it's accretive from an earnings perspective, basically, because you're eliminating all of the costs of that store, but you're transferring the sales, whether it's to their e-commerce.
These are going to be
platform.
Some messy EPS numbers, basically. We just need to get to that adjusted figure as soon as possible.
It's going to be noisy too, just because there's still a lot of supply chain issues, like getting the PlayStation 5s and Xbox Series X's in people's hands. Like clearly demand's still outpacing supply. I don't know if it was an April Fool's joke for Halo Infinite being delayed again to 2022 or not this morning, but like a lot of the software has been delayed because the teams can't code and meet and do all of the development in person because of COVID. So there's been a lot of software delays. So look, it's like, yeah, the results, fourth quarter was disappointing and the stock declined big time the next day, and then it immediately jumped up again because GameStop does whatever the hell it wants. But you can't look at GameStop in this very short-term view. You really have to think, where is it going? Where are they trying to tap into? Like, to me, I think the holy grail would be some sort of a subscription model a la Prime, where they have PowerUp Rewards Pro right now, which is $20 a year. They have like 5 million paying members. But can you make that really truly, if you're a video gamer, it's like, I have to have PowerUp. Like it's a no-brainer. Like if I'm, most American consumers have Prime. I think Ryan sees it as let's make PowerUp all the data that's related with all the consumer transaction activity. Stephanie Winsink is the sell-side analyst at Jefferies, and she's been talking about viewing that data as like a 600 million EBIT opportunity. We don't think it's quite that high. We have it modeled out on gmed.com, but there's a real big opportunity to sell services to folks who want to tap into GameStop's target market, and it's better than Amazon because you can actually find what you're looking for.
Okay. And so I've got a couple things from that. First one, you mentioned April Fools. Okay, I've got to bring up my favorite corporate April Fools prank of all time. It was when Audible.com came out and said that they're launching a service for your fish. Like they, put up a web page and like a press release that looked all official. Like, your fish, can have access to subscriptions and listen to books when you're not home. It was great. And then off of that, getting back to your trades a little bit, because there's so many people in the chat who are trying to speculate about your price target. So let's just settle it, right? And so I'm going to ask the question of when you're selling the puts against the stock, like how are you choosing your strike price or backing into that?
Yeah, I think I know I've said it elsewhere. I forget if I've really made it clear on the show, and I hope it's clear about my actions. I'm typically a relatively conservative, more value-oriented investor, and GameStop is a rather unique thing in that it transitioned from being deep value. If you guys know the Reddit user, Mr. Keith Gill, deep fucking value. I don't know if I'm allowed to say that on Benzinga, but that was the way we were viewing it in 2019, 2020. I, independent of one another, all of these investors that Mike Burry, we all saw it as like this deep value play for a variety of different reasons. And clearly now it's no longer a deep value play at 200 a share. It's a different play. It's a transformation, growth type play. But there is prospectively value at the right price. So the way I'm thinking about it is, with implied volatility at these levels, I can get paid a nice premium to possibly buy the stock at a price I'm willing to pay. The report we put the report out in mid-January. The price was $35 when we put it out. And we had a bear case that was in the low 30s. We had a bull case that was, 169, tongue-in-cheek, but it was truly in the mid to high 100s. And we had a base case that was around
no
80.
decimals on that. You didn't have the 169.
It was 169 420 was the precise price target.
Okay, I may or may not have a GME sell order in my brokerage account that was 420.69. But more on that later.
Luke, I sold when I was getting interviewed by Joe Weisenthal on Odd Lots and Tracy Alloway. I sold at 420.69. That was my best sell.
You did? Okay, no, that's mine too. All right, we're in that one together. Let's go. It was like a 5 a.m. trade for me. It's like my alarm went off. I checked it. I'm like, oh, it's close. I'm throwing this order out there. Let's go.
Oh man, it's too funny. But look, so like to get to the question, we haven't updated it because yes, we've got the hires, and I was saying earlier, I think it's safe to say that the execution risk is lower because of the team that they're putting in place. So I think that the bear case, being in the low mid 30s, it's probably safe to say I'd be more comfortable with a $50-ish bear case, just as a, we need to run the model. I'm not trying to say that's the definitive, but I'm more willing to roll my CSPs that I have written at like 30 and 40. I have them expiring in April 16th, and I mentioned I'm waiting for the ACATs, but once I get it there, I'm going to do, a roll up to $50 strike, probably look at, even if you look at 3 months out for July for 106 days at $50, you're going to get a $45 break even. So you're going to get a, 10% return over that 106 days. That would require a 70+% price decline for you to even get assigned. Like, to me, the risk reward there is pretty good given how comfortable I would be buying GameStop at 50.
Okay. All right. I like it. That's helpful. You brought up a couple other points to bring up. Does this show you? I mean, you've been here before. We promise information, ideas. We also have gimmicks and jokes. Best joke of the day so far. Best joke of the day. Well, you pick whatever you want from swag.benzinga.com. We'll run that one again, guys. But so far, Rod, you should spell your name RODD. I don't know if you've gotten that one before, but if not, it's pretty damn good.
I got a specialty license plate coming in the mail from the state of Florida, GMEDD. Can't wait to put that on my whip.
Let's go. And then you asked another question. You don't know if you can swear on this show.
Oh, fuck yeah, this is the shit.
So that'll answer that one for you. When the idea is to get this over the top and on the TV sooner than later. So things may have to change, but we are having fun while we can with it. Awesome, Rod. I mean, I don't know how much longer you have, and we'll let you get back to life and whatever you're doing other than gracing us with your presence and hanging out. But any other final thoughts, words of wisdom, etc.
Just in a related type of investment opportunity, there's a stock that I had bought within the last couple months, a SPAC that went public.
Okay, wait. Wait. All right, I'm slowing you down. So we're about to get a new ticker.
New ticker.
Oh, let's go.
So this company is one of those companies that, similar to GameStop, is a venerable, well-known brand. This one's known globally. GameStop is a little more US based, but you've got a brand that can play in a variety of spaces, whether direct to consumer, whether you're licensing the name. They've been private. I think they've had some mismanagement in years past. And people think about them from a very legacy perspective. They think about the magazine and the centerfolds that come associated with that brand's legacy
I know
products.
what it is. We already talked about it. All right.
You did? Okay, I'm sorry.
No. When we talked about it in a joking manner.
Oh, you did?
I almost asked
it's up 16% today.
I was almost going to ask you too if GameStop could be an NFT play, but I didn't really want to throw that out into the universe. But they sell a lot of merchandise. Just okay. But all right. Say the ticker. I'm pulling up the chart.
PLBY Playboy.
PLBY. Another turnaround story. All right, take us through this one.
Yeah, so you got Ben Cohn has put a team in place that, to me...
Wait. Who put a team in place?
Ben Cohen is the CEO.
Okay, so we got 2 Cohens that we're dealing with.
Oh, yeah. No, it's K-O-N, not K-O-H-E-N.
Okay, good. I was about to say, do you have a stock screener where one of the criteria is CEO or like executive last name? Only show me ones that have guys named Cohn. But okay, all right. Different spelling, so I can get past that. Keep going.
Right. No, so look, I mean, the chart has obviously run up rather significantly in the last few days. They had, in an industry conference, talked about the idea of monetizing some of their assets. I guess you guys already talked about all the NFT stuff. But no, this is one of those things where it's like internationally, in India, in China, all over the world, this is one of those like Americana brands that are very well perceived. They've done a lot of work from what I've read and taken away in expanding beyond just, your core male audience. They've grown share with women and especially grown with younger people. And to me, it's a brand that you don't have to invest much in because it's ubiquitous. I think everybody recognizes the logo and everybody's familiar with the brand. So there's just a good team in place. They've got a great brand that I think they can get a lot of leverage off. And I think that this could be worth multiple billions within a few years.
So multiple billions in a few years. What's the market cap or the enterprise value right now?
Right now, I mean,
roughly,
things all over the place.
Within an order of magnitude, I just have no context.
Yeah,
right,
it was a few hundred. It's 750 right now market cap.
So 750 market cap. And quick lesson: difference between market cap, enterprise value. Enterprise value, you are adding in debt, specifically long-term debt, or at least that's how that's what I add back, and then you pull out cash. You think about, where does the distribution of cash flows? You got to service the debt. That's the difference there. And that's also why we use EV to EBITDA and not EV to market cap, right? Because that EBITDA has to get distributed. Some of it's going to the debt holders, not just to the equity holders. But that's an aside. But okay, how do they make money? Is it like a digital publisher play? Like this, like the media space is a space that I know well, right? I've been at Benzinga for 8 years. I know this space and what opportunities are in this space better than anything. So how do they make money? Is it subscriptions, ads, etc.?
Sure. So
it could be brand licensing too. I don't know.
It is a big portion of it is licensing related revenues. So I'm pulling up the investor deck because I'm not going to claim to be nearly as well versed in the company as I am with GameStop.
Okay.
They have a pretty solid investor deck though. I had jokingly shared, if you were to pull up their investor deck, slide 14, I thought, as somebody who puts a lot of board slides together for my day job, I was really impressed with the word choice and the visual cues they put on slide 14 in particular of their investor deck.
What so you go Playboy investor relations, I'm guessing is where you started to get to that. Wait, I don't have that. Is it this MC acquisition? Is that where I want to go?
plbygroup.com/investors.
Thank you. plbygroup.com/investors. Wait, in your day job, oh, come on. What did I do wrong? plbygroup.com, right? So, all right. We're not pulling up the board deck today, guys. But
just Google PLBY investor relations, and it was the first result.
Okay, there we go. Thank you.
PLB.
I did Dave and Buster's. That's funny. All right, so here's the investors.
And March 21.
Yeah, there's the March one. All right, and we want to check out slide 14.
Yeah, I just thought it was one of those really well crafted like a rapidly growing sector. And then you can kind of see the ring for the distribution breakout on the right-hand side to, you can see the euphemism there. Just really enjoyed some of those visuals on this as somebody who makes these. Yeah, I do corporate strategy is kind of my day job. So.
Okay. All right. Well, we need help with Benzinga. Clearly, as you can tell by coming onto our shows. But anyways, that's a different discussion. Okay. This slide is great.
Yeah, it's definitely a growth play. I mean, if you were to look at like the current financials, the EV to EBITDA multiple, like, yeah, you're definitely paying a pretty hefty premium. I think what you're paying for, to me, what I'm paying for is I'm paying for what I believe to be a strong management team that can really leverage a brand that is unique. I don't think there's quite another brand positioned like it globally. Sexual wellness, the whole like destigmatizing of things sexual related. I think that's going to be a good industry to be a part of in the 20s.
All right, we need a forhims.com, ticker HIMS, in Playboy merger. All right. Not throwing that out there as a rumor, just that's my joke of the day. Okay. But all right, yeah, it's an interesting one. And like a big part of our business here at Benzinga is content licensing. We don't license our brand out. But we do a lot of content licensing, and it's a great business because we basically don't need to do any sort of incremental work, which means that we're not incurring any sort of incremental expenses. And you're generating in our case, right, very consistent revenue, the same amount of payment every single month for long-term contracts, 12, 36-month contracts that automatically renew, have low churn, et cetera. Because once somebody becomes dependent on the licensing the content that we sell them, it's tough to get off of that dependency. And I would imagine that the same is similar for if you're building a business around using the Playboy brand. You take that brand away, what do you have left in the business, right? The brand affinity and the brand there that's been established is a really valuable piece of the business, right? That's why when Benzinga breaks stories, Rod, check this out. We broke 3 stories last week on public stocks that moved the companies more than 20%. The companies came to us to put the news out there and then followed out with the press release like an hour later or whatever it was.
Awesome.
But if I was just starting, lukestocks.com, maybe I should start that. But if I was starting lukestocks.com and I put that out there, it's not doing anything to the stock. It's that brand that's been built that allows that to happen. So.
Yeah, you'd have to invest a little bit in marketing lukestock.com to get things going. But yeah, Playboy and Benzinga don't have to as much.
Yeah, exactly. But cool, man. All right, so I like it. You not only gave us the deep dive on GME, we've been needing to catch up with you. I was so bummed. We talked about you coming on the day after the earnings report, and I totally forgot. We hosted a 2-day biotech conference on the channel instead. So there was no show or anything. It was actually really cool. 60 small cap biotech companies basically presenting their drugs and why they make a compelling investment, all back to back 15-minute presentations. Really cool day. But we missed being able to debrief about GameStop.
It's all right. Hopefully we'll hear more soon from the company and we can talk more about it. But regardless, in the meantime, it continues to be one of the craziest stocks in the market. I think we can all agree.
Yep. Yeah. I mean, and fun to watch. I mean, that option pricing, guys, if you're just joining us, scroll back to the beginning of the segment, right? Just hit that little rewind thing, pull it back until you see Rod's smiling face there. And we were going over how expensive the options are. It's nuts. I've never seen anything like it. Rod was saying that it was crazier when this first started happening. I don't know why we didn't look at the options chain then. I guess we were just so fixed on the actual stock itself that we didn't. But all right, guys, Rod's Twitter in the chat, gmedd.com in the chat, my Twitter in the chat. So make sure you stay in touch.
And my Twitter is actually just at Rod Alsman. So the GMEDD one is a group Twitter, but you can follow both.
Okay. Well, I put Rod Alsman in there.
There it is.
Put gmedd.com in there.
Perfect.
So,
appreciate it.
For sure, man. Appreciate you coming on and hanging out with us.
Thanks for having me, Luke.
Absolutely. All right. Talk soon, sir.
All right. Have a good one, everybody.
All right, guys. So there you have it. There's the deep dive. There's the breakdown on GameStop. What I love that Rod brings to us is that it's like it's informed, right? We're actually learning about the company and learning about the story and understanding what do the bulls in the stock care about, what do they see, et cetera. It's not the hey, we're going to speculate on price and YOLO trade this thing, which I do enjoy, right? Don't get me wrong. We're not cutting that out. But it's important to actually understand the story and all the great research that they do. That's where it's at gmedd.com. But all right, I think it's time for some takers, guys. I'm going to make another second ask of the day. Please like the stream. Please share the stream. You guys saw Jason popped in the chat for a minute here, and then he left because there's not enough viewers. Maybe if we get it up in the 600s, I don't know. Maybe he'll come on and hang out with us. But all right, let's do some ticker time. I see James in the chat starting it off. NDM. That's where we're going first. Kathy Play, producer AB. I see you hanging out on the sidelines. If you want to come back, come and kick it with us.
What up, y'all?
What's up? We're about to hammer tickers. We're going fast. All right, we're gonna rapid fire tickers, and we might YOLO trade Kodak. Maybe even we put a bounty on it. If we get up to 750 likes, we're going to YOLO trade Kodak long into the 3-day weekend. My favorite stock to hate. I will hit a Kodak rant today. But let's talk about Nano Dimension, ticker NNDM. That's Nano. November, Delta Mike. Any opinion on this one? I don't know a ton about the stock, guys. Just pulling up the chart quickly, it doesn't look great. Let's see. Let's look at daily candles. So here are the daily candles on the stock. That means each red or green bar represents.
Wait, Luke, real quick before the SEC starts knocking on my door, I gotta throw this out there. I do hold a little small position in this stock. No options or anything, just some common stock.
All right, there you go. Okay, I own a lot of stocks, and options. You guys know. So somebody had a great comment in the chat yesterday. I couldn't remember what my Palantir trade was. They said if you can't remember what the trade is, you own too many positions. I think that is so true.
But then someone else in the chat remembered the exact that you had 22 whatever.
22 strikes, hold the put. So we're gonna look at that trade in a second here. And actually, I got logged out of my Interactive Brokers account. So producer AB, if you want to share your screen and pull the charts up, I'll log back in so we can look live at that Palantir trade that we made together last week. But NNDM, I know that it's a Kathy Wood stock. Chart doesn't look great, guys. If you're looking for an entry or a line, it's pretty obvious. These double bottoms right here. I don't know if it's helpful when I call these out because they seem so clear to me. But I've also been doing this for a number of years. So let me know if it's helpful to call these out. But you got two bottoms here, right? Stock bounces off of those, stays higher. It looks like it did and is now coming back down. Not the setup that I want to see. If you want to hit it long, maybe wait till it gets down there again and take a crack at it. But not knowing anything fundamentally about the company, just looking at the chart, I'd want to see some more momentum in this thing before I were to hit it. Kathy Wood, her trades really haven't been making waves anymore, right? The Kathy trade is up, is what I'll say. So that's where I'm at with that one. I'll throw this one out to the chat, out to Zinger Nation. If you're there with us, you're hanging out, you're spending your Thursday with us on the short week, you are a member of Zinger Nation. Throw the 1 in the chat if you like this stock. If you do not like the stock, throw the 2 in the chat. So there's that one. Next one, producer AB. All right, you're taking the screen share over so I can get my Palantir ready.
Well, now we just have to go with whatever I already had pulled up. So
we're not doing Boeing. Nobody wants Boeing. Fine, do Boeing.
All right, I like the stock. All right, I'm done with Boeing. Go ahead.
All right, wait, no. There's more to talk about with Boeing. If you're gonna pick the stock to talk about, we have to actually talk about.
Okay,
it,
that
right?
was just what was already.
This is the non-bullshit hour. This is no pre-market prep. Spencer Israel bullshit. Time.
Yeah,
here,
we
okay?
do deep DD here, like Rod Osman.
If you want to bring up Boeing as a stock to talk about, let's talk about it. There's some what I think the most positive news to come to Boeing happened within these past couple days, right? 3 days, maybe this week at some point. We got some really positive things about Boeing. Here was my concern with the stock, right? You had all these airlines cancel flights, shut down flights. They still have limited service, right? It's picking up, obviously. Let's make sure we look at the TSA numbers next week. But service is picking up. It was lower. My fear was, hey, these planes have been hanging out in reserves for a while. They haven't been getting as much wear and tear. It's going to slow down plane orders, right? So the airlines, they get back up and running first, and then at some point after that, they'll start ordering new planes again. That's what my biggest fear with the company was. They got at least 2 material orders, 2 big orders this week. Scroll down to your Benzinga Pro for us, producer AB. All right, keep going. Yeah, so hit BZ Wire.
Oh yeah, I'm on only options.
You just
activity.
have news. Okay, so Boeing gets okay. So look at that. 2:07 a.m. yesterday. They got some planes ordered from Alaska Air, and then what was the other one? Look at the date.
Southwest. Oh, here we go.
There it is. There's Southwest, right? So you got 2 airlines ordering planes, right? You see 2 do it. Maybe it's an indication that I think it's more of an indication than not that others will follow suit. I'm still not in the stock. I'm not going to get into the stock, but if you're looking for a reason to get in, you could potentially have some decent news flow coming into Boeing, driving some energy into the stock. So that's what the deal is there.
Yeah, and I agree. So I'm a little worried in the short term, especially with some of these European countries kind of going back under lockdown. Obviously, that will slow down some kind of international travel between here and Europe. But one thing I do like about this stock and like looking at the different charts is, okay, so look at right here. I've got the 5-year. I'll go to the 2-year. Pre-COVID last year, before the market crash from COVID in February, it was trading about $340. Right now it's at $250. If you look at some of these other companies in the same industry, so for example, Southwest has already climbed up back above its pre-COVID price. Same with,
and I think the issue that people have is the same problem that I have, which is, hey, these airlines have not been using planes, so why are they going to buy any new ones? But the 2 orders this week, especially that tight of a time, and as they're bringing flights back online, that's the most bullish thing that I think has happened to the stock in quite a while.
Right, and I'm looking at American. Looks like American Airlines hasn't quite gotten up to its pre-COVID levels. But the bottom line is what I'm seeing is that Boeing, more so than some of these other companies in the, airline industry, hasn't even come close to its pre-COVID levels. So as long as we keep getting good news that companies are buying Boeing's planes, we don't see any plane crashes, anything like that, I expect that the share price of Boeing to keep climbing back up to its pre-COVID kind of levels.
All right, next one, producer AB. Let's do. All right, you want to have some fun? Fun on a Friday?
Yeah.
Show me the money.
EBS, ticker EBS, Echo Bravo Sandy, EBS. Let's take a look at this one. All right. So ready for me to quiz you? This is sort of fun with you doing the screen share. I'm just I have like less agency into what we do, and I can just sort of sit back and watch. All right, EBS. Why is the stock down 14% today?
Let's see. So I don't know anything about this stock really.
Nope.
I saw it. Wait. Let me guess. It's BioSolutions.
This is no get technical with Neil where we take 20 minutes to talk about anything. All right, we fly. Okay, stock down 14% today after they effed up the vaccines.
Up the vaccines. That's a big deal.
I don't know if there could be a more hated company in America today than ticker EBS, Emergent BioSolutions. They are the producer of the Johnson & Johnson vaccines. You saw Johnson & Johnson come out yesterday and say that they're halting shipments of future vaccines after there was a mix-up at a ticker EBS production facility.
Yeah, let me read this Benzinga update real quick. Emergent BioSolutions shares are trading lower after Johnson & Johnson said COVID-19 vaccine doses were spoiled at an Emergent site in Baltimore. So Johnson & Johnson does all this work to make this great vaccine, whatever, and they give them to this company, to EMS, and they just spoil the actual vaccines.
Exactly, right?
Spoiled it.
So I'm not really a buy the dipper. I'm sometimes a buy the dipper. But I view this item as pretty one time. You got the stock down 14% today. It's and zoom out your I'm taking the screen share back. This is too difficult.
All right, wait, hold on. Where are we going to go? Year to date?
Too late. It's already off. Check this out.
5 year?
All right. Look at the line here on this stock, ticker EBS. You got the stock at basically $70 or $80 on the dot right now. Look at this cluster of lows that we have, right? 1, 2, 3, maybe these ones 4 or 5. You can sort of throw them in there as well. Stock is sitting right at the lows because this news is I think a one-time thing. I think that they'll get over it. I sort of like this as a buy the dip opportunity. I'm actively looking to unwind my portfolio. We just checked yesterday, right? I'm still more than 100% long and on margin. Amazing on a day like today, right? Where we got a really nice and healthy P&L in the live portfolio today. But overall, I do want to unload and unwind a little bit. So I don't think I'm going to take a crack at this one. I might. I'm watching it. It's stock's still sitting at the lows of the day. You do have some weekend risk if you want to hold it into 3 days, right? They may have issues with there could be some more bad news flow coming out over this weekend. All right, I'm not going to hit this one long right now. I am going to throw it down on the list. If this stock makes it through the weekend without another wave of bad news, I'm going to look to enter this one on the show live on Monday. But
I mean, okay, assuming this company gets revenue from getting contracts from companies like Johnson & Johnson, why, if you're a company like Johnson & Johnson, would you go give this company a contract right after they just screwed up the COVID vaccine?
Do you know how many vaccines they need, not just in the U.S. and in the world?
Oh, that's
They're not going to shift their supply chain.
Okay.
We've got like global peace deals that are reliant on us sending other countries vaccines, right? They're not going to take no way they let that get effed up. And that's why I view this as more of a one-time thing than anything. Again, you got the stock sitting at that previous support, or one-time news. I think that there could be some action out of this one. If they make it through the weekend again without more headline risk, without more bad news, I think the stock is interesting.
And then again, I've got the 5 year pulled up here so we can really take a look back here in 2016, whatnot. Let me go back up to the 2 year. But yeah, I mean, and just in general, that's one of the reasons I've been more bullish on kind of at least the U.S. economy over the next year or so, is we've been blowing the numbers out of the water with the COVID vaccines. I don't know if you saw, but West Virginia, the state of West Virginia, was getting a higher vaccination rate than the country of Sweden.
West Virginia. All right. Next up, Palantir, PLTR. I'm getting some hate in the chat for calling out Mr. Neil Hamilton. You guys don't know that actually, Neil, in real life, Neil's actually one of my best friends in the whole world. Yep, it's true. So is Spencer Israel, actually. But beyond that, all right, let's start with the chart. Let's look at Spencer Israel disagrees with me. I'm not on his list. That's fine. He has a special place in my heart. He heard that. Oh, look at that. I got a Spencer Israel high five. That's how I feel, okay? I invite him over to my house every weekend.
Wait, is he in your top 5 on MySpace?
I don't know. I get this, and then we're going to talk about Palantir. I've invited Spencer Israel over to my house like every weekend for the past 2 years. He's never come over. But anyways, let's look at Palantir. Palantir Technologies, ticker PLTR, Papa Lima Tango Romeo. We are synthetically long this stock, and when I say that we are synthetically long this stock, what I mean is that we went ahead and we sold puts against this thing. We sold the April 16th, right? So that's the date. We sold the April 16th, $22 strike puts for 92 cents a share. So basically that means that our break even on the stock is hanging out right around $21 a share. If we look at what the P&L is, we still have the puts on there. It's basically unchanged, right? Up 14%. We sold the puts. We want the price to go down. Up 14%. Again, I use this put selling to get better entries or to collect premium on stocks that I'm okay holding for the long term. Obviously, some strength out of Palantir yesterday. It's given that up today. Not a good sign at all, in my view. So if we're thinking about this company technically, there's I think that it has almost nothing going for it, right? You had a ton of momentum yesterday. We've seen a lot of stocks that picked up, got into favor, especially a lot of these previous high flyers picked up favor yesterday, continued it today. That has not happened for this stock. positive catalysts coming out. I don't imagine that we're going to get much until the next earnings report. It used to be a company where they would just announce contracts, and every company gets contracts, right? At Benzinga, we've gotten 3 contracts back this week. So they used to announce contracts, and it would move the stock back when it was more closely watched. Contracts do not do that anymore. So we're really, wouldn't expect to get significant news out of this company until earnings. So look at that date, 4:30. If I were not, I'll give my opinion on the open trade that I have right now. If I were not hosting this show, I would go ahead and close this Palantir put selling trade for my my measly 14% profit. Which again for a YOLO option trade on a stock as volatile like this, it's not much, right? It's not like we're buying shares of a General Electric or something. I would actually close this trade. The only reason that I'm not is because as a group, we sold these puts together 2 weeks ago, and we said we're going to track it every single day to sort of track through and understand put selling a little bit more and use it as a demo. And because there's not really a lot of money on the line, there's only a couple contracts here. I'm going to leave it open so we can continue to see how the price of the puts change as we get closer to expiration, as the stock price fluctuates, etc. But if it were me, I would be, if I were not doing this, I'd be bombing out of the put trade right now. AB, I don't know if you have any other opinion on this one.
On Palantir, I kind of, even when it was like getting a lot of hype months ago and stuff, even when I was like, yeah, I could buy the stock and make some money on it, I didn't really like, I guess, like the company's business model or what they actually do. I felt kind of like dirty if I was investing in them, which is fine. I'm not like, some moral whatever, but I just didn't really like, I guess people were calling it the, a public Skynet, like from Terminator, like you can invest in Skynet, like stuff like that. It's like, I don't know if I want to be on the, the one investing in this, but, Luke, I'm curious.
I don't have those moral objections. Sorry.
Yeah, I know. I don't really either, but that was something that came up when I was looking into the stock in the first place.
Also, holy crap. Wait, producer Rohan, we need you to focus.
Is it storming out there or something?
No, producer Rohan, can you please focus? He's talking to Spencer Israel like they're, never mind.
Like they're working or something?
Can you zoom in? Can you make the camera focus on the outside? Since we started this show, it is a blizzard in Detroit right now.
Yeah, it looks dark out there.
I thought that we were through this. You know how I feel about that?
Surprise, motherfucker.
But I'm oh, he's gone. He's gone.
All right, thank you, producer Ron. I don't know if you guys can tell and you guys can see that, but crazy. I thought we were through the snow. It was 70 degrees this weekend. I wore a t-shirt.
I was gonna say I'm curious, just in general, on some of these baskets of Kathy stocks that have been getting hammered, like Palantir and NDM. Do you think those companies just got a little overbought on the way up, or do you think they are, going toward a price that they should be going toward more lower, not that they were just overbought, if that makes sense?
Wait, one more time.
So it's some of these Kathy stocks, I've just been watching how they've been getting hammered, and like in general, like a lot of growth stocks have been getting hammered. But do you think they're going down to kind of where they should be valued out stock wise? Or do you think they're just dropping because they got overbought on the way up?
I mean, I think I'll throw out a third scenario, right? It's like when they say to Spider-Man, hey, save your girlfriend or the bus of kids. He throws out a third scenario. So I'm going to throw out a third scenario, which is just, I think it's some general sector rotation. You know what I mean, right? Like let's look at. I'm going to show you two things. I know we have guests waiting, so we'll get through this quick. All right, so here's a chart of SPY, SPY, daily candles, 1 year, all-time highs. We're running up the SPY, okay? Now let's go look at IWM. This is small caps, right? Still a decent bit off of those all-time highs. Let's look at the triple Qs. The Nasdaq still a decent bit off of the highs, right? And so we've gotten some rotation, right? Look at SPACs. Any SPAC you own, I guarantee you're not up on it. So some people might be out there in the chat. I'm not. And they were the hottest things around. It's just
wait. Spencer never knew that I came up to the office for a couple of days.
Okay, well he did. So all right, producer AB, you've got some guests to bring on.
Yes, sir. I'm gonna bring them on right now. Michael, how we doing?
Wait, we need to play our special guest video.
Oh yeah, wait, Michael. Sorry, one sec.
All right, now go for it, producer AB. This is
all right,
let me asshole movie did to Michael not playing the video.
I was gonna say,
Michael,
man,
I did you dirty. I did you dirty there, trying to bring you on without our proper Zinger Nation introduction.
Yeah, man. Thanks a lot for that. I appreciate it. Thanks for running it for me. The grand entrance. Thanks again.
And then we got looks like we got Terrible Trader here. He wasn't with us last time.
Right.
How we doing, Terrible Trader?
Hey guys, doing well, man. I'm doing well. Happy to be on. Thanks for having me.
Yeah.
All right, so it's the name Terrible Trader. We got a green ass day today. Are you doing okay?
I'm killing it.
There we go. That's what I want to hear, baby. All right. Glad to hear it. So I guess what's up? What's in the portfolio? Anything especially interesting you're watching today, etc.?
I wanted to hear you guys talk about Palantir more because honestly, I don't get this company. I don't understand it. I never did. The fundamentals of the company are what avoided or prevented me from buying more. I actually just bought it because my community and like my Discord channel like really liked it for some reason. I don't know if they liked it for technical reasons or just like the vague idea of software as a service for, I don't know, things that already exist like through Salesforce. I don't know. I just don't really get the premise behind the company or the stock or why anybody would be a buyer here.
Yeah, so let's dig into it. And like just like you're mentioning, your Discord community loves this thing, right? A nice advantage that we have is we see all this traffic on Benzinga.com, 15 million people a month. We can see what stocks do they love and flow to, and it's another one of those hot ass retail stocks that everybody's a fan of and is flowing into right now. The reason that I think that the company is interesting is that they power so many defense systems that we have, right? And these are contracts that I think don't go away. I think it creates a stable revenue base. And if they're able to basically, do the data analysis that helps us make defense decisions as a nation, and now they're just starting to get into some of that Fortune 500 game. They've been in it for a little bit, but that's where the focus of the business is. I imagine that there's a lot of money to be made there, and so that's why I think that the company is interesting. Not necessarily why I think the stock is interesting. The stock, was so hot when there was all that interest in it. Obviously, that's waned a little bit. So I don't actually love the stock right now. But that's why I think the company is interesting. It's
just like I view the military and the government as very conservative in the sense they usually give contracts, especially large contracts, to companies like Microsoft, which you saw yesterday, that $22 billion Microsoft deal. And that's because most of the leaders of Microsoft are not in the news constantly. Or if they are, it's because they're being dragged in from the government, like through congressional hearings. In general, I think that
they don't want to be in the news.
Yeah, exactly. They don't want them in the news,
as opposed to Elon Musk or some
Peter Thiel and all the other people behind. A lot of these moves like Palantir. Even the big thing about Palantir is like who's invested in it more than what it does. In fact, every time I see what it does, there's nothing that seems like Salesforce wouldn't be able to do, or Microsoft for that matter. Yeah. And so I'm kind of bearish on the stock or the company.
I was kind of joking with Luke earlier because I was saying when I first looked into it, I was having some moral, because it's not like I'm a big I mean, I pitched a freaking private prison stock on here like 2 weeks ago because the fundamentals made sense, the numbers made sense. But with Palantir, it's just like you ask 10 different investors what they do, you get 10 different answers. Like looking into it, like they do location tracking services, of for a company, like all this stuff, and it's just like I don't know. I think kind of more so than just the moral side of it, like the public perception of Palantir could be getting more and more negative as we go down this road. Like someone in the comments just says Palantir is what Edward Snowden warned us about. Like talking about, of course, he was talking about the NSA,
like all the data mining and that sort
all
of
the data mining. That's what they do is they mine data and sell it to either the government or private companies. So it's not really something that I love, but the stock could keep going up. Who knows?
But we talk about like sector rotation and people rotating into different stocks. I think the rotation that's occurred in the market is from shitty stocks to good stocks.
I totally agree.
It's nothing to do with look at Nvidia today. Nvidia is doing just fine. Semiconductors.
Don't tell me, did I miss my chance to buy Nvidia at like 490?
Yeah.
Oh my god! It's gonna be at 800 in like a year, and we're all gonna look at it and be like, "What were we doing not buying Nvidia at 490?"
Yeah, I bought Nvidia at like 456 in the middle of this correction, and I put a pretty large portion of the portfolio to work in Nvidia. But I agree with you. Like, there's going to be future corrections for sure, where you're gonna have chances to buy whatever you want. But in terms of Nvidia, it might just continue to rip to the point where you might never get that 490 entry, considering if the market keeps going. So feels bad, I guess. What happened?
And I love that comment about the rotation from like shitty stocks into good stocks, right? But because like I myself, right, I share my portfolio on this show every single day, and like whenever this volatility first started a couple weeks ago, right, like I was getting cracked, and I'm just scrolling through. I'm like, why the hell do I own this? Like this is like it's not a fake company, but I'm like, this is basically a fake company. Like why do I own this dog shit? The reason why is because it's been so hot for so long, right? And riding it as a swing momentum trade. And it's like, yeah, let's get out of some of these YOLO names and concentrate more into some of the more fundamental names like a Ford, that I'm a big bull on.
But I will say this is that don't abandon the YOLO names just yet. There's going to be a new generation of YOLO names. There's always more
NFT
supply.
stocks.
What's that?
NFT stocks.
There you go. Why not? Those are going to be the new runners. I mean, look, it's always a good environment to be a retail trader when there's other retail traders in your environment. And I feel like right now there's never been more dumb money. I hate to say it. I mean, a lot of this money is my money. Like I am with the people that are trading some of these stocks. But all things considered, I don't think it's necessarily a bad idea to continue to invest in growth stocks. I think everyone's just going to be a winner, and you're going to see these occasional waves of cleansing come through to get rid of some of the names that are getting a little bit stale, when all they had to go off of was just their name. Like Palantir is probably the best example, but there's others.
Absolutely.
I don't know. It's just that to me is the big topic right now over the last month. Is just
well, hold on. I think there's a massive difference between a meme stock and a growth stock. So when we consider what some meme stocks are, there's a couple of like very early stage like gaming plays and sports betting plays, things outside of DraftKings and like AAA developers, things like stocks like Gamble, stocks like SLGG, stocks like GME, for example. There's a lot of meme in that. But then stocks like Palantir, stocks like Corsair, for a long time it was Tesla. It's more so of a growth play than a meme play. And I feel like a lot of the retail investors nowadays kind of put those into one basket, and that might not necessarily be the healthiest thing to do as a trader.
Okay. And I want to go off of something that you just mentioned a minute ago, right? With there's never been more retail traders in the market. Do you think it's here to stay? That's a question at Benzinga that we're talking about every single day. So I'm curious where you guys are at, and I'll share where I'm at.
More than here to stay, I think it's actually going to grow, and I think it's going to grow in a way that nobody anticipated. I think the new savings account is your Robinhood account. I think the new savings account is your Webull account. You're no longer. I mean, my generation spends money like it's running out of style because we've never been encouraged to save it. And if you can stash money away that you're not using in a productive way, or in a way that titillates that little gambling side of your brain, whatever it is, I think that's the future. And the more retail gets involved, the more our generation becomes the high earners. I think you're going to see retail trading grow and grow and grow. And I don't think it's you know what I mean? Like we're seeing the first wave of this gigantic influx. And I'm sure you guys are seeing it through your numbers, but you look at people like Tasty Trades as an example, and they've seen record account openings. And I don't think it's not only do I think it's not going anywhere, I think it's going to grow.
Yep. You see that Tasty Trade deal, that acquisition?
I did. Who bought them again?
IG Group, which is a Forex brokerage globally, not a ton of U.S. presence, but a decent bit. But I mean, they bought the company for a reason.
Yep.
Wait, we're talking about Tasty Trade, the one that Tom Sosnoff owns?
Yeah.
Same guy that coded Thinkorswim? Dude, that guy must be so rich, like Jesus.
Round two. So Thinkorswim for $600 million, turns around, does the exact same thing, sells it for $1 billion. 4 years later?
Let's do it again.
I watched this
Benzinga to do it again.
Yeah. Like serial entrepreneurs, that's a thing. Look, me and Hopt are really good friends, and we agree on most things, but this retail conversation is something we've always been in somewhat disagreement, and I think maybe the truth might lie in the middle, but we know historically the access to the market has always improved. So commissions have always gone down, way before the 2000s. The accessibility of how many stocks you can buy, how quickly you can buy them, that it's always been more accessible to the retail investor. And Robinhood is a great example of like where things might quote unquote end. Like now accessibility is on your phone at the click of a button with zero commissions. And so the question is how much more accessible can the market get than that? With that being said, in terms of the retail participation, over time, when retail blows up, they leave. And the market historically goes in a cycle where people are excited about it. They believe in it. They think it's real. It's possible to make money trading. And then you have corrections and people start to get that negative bias towards it. I say this from experience because my dad has been a financial advisor his whole life. And so finance has been like near me my whole life. And I remember growing up, post the Great Recession and getting that like negative sentiment towards stocks and the market. And people saw it a lot more as a gamble. Now people look at stocks as some sort of like entrepreneurship endeavor. This cycle where people like and hate the market is I think cyclical. And I'm not big on cycles in the first place, but this one is one I do believe in. And I think it will just continue to happen again. I mean, you saw it. We just had a 10% correction in a couple of indices. That is light work compared to what the market can really do to people. And you see the viewership go down on streams. You see the engagement go down on Wall Street Bets. There's still participation. It wasn't a large correction, but imagine what would happen if the Fed takes their foot off the gas and starts offloading their balance sheet, or maybe they start raising interest rates, or they start experimenting after they reach maximum unemployment where they can take the market lower and kind of get some more rational prices going. What that will do to retail, because we know retail is positioned, and they always have been, in highly levered names like high growth stocks. So for me, when I look at this, I think to myself, retail is big, but when we do get corrections, they're going to get hurt the most because they're going to be the most poorly positioned. They're going to have the poorest, like exits. They're not going to have an exit plan. They're going to be over levered, things like that. So that's something me and Hopt like kind of disagree on, because I don't think anything is different now compared to, people moving to Wall Street in the tech bubble to become day traders, or the shoe shiners back in the recession telling the people on Wall Street their stock picks. That's my take on that.
I think that point you made about as far as like retail traders being not well positioned, we saw in real time, because a few weeks ago when the market first got a little choppy, people on Twitter and whatnot were talking about a market crash and all this. And it's like you look at SPY, and SPY might have gone down 1.5% one day, and all of a sudden people are talking about a market crash. And it's like you look at SPY as a long view of SPY, and it's like there's no market crash. You barely could even call that a correction, let alone a crash. But because everyone was so leveraged in those,
it was the YOLO stocks got hit, right?
Yeah, it was the YOLO stocks got hit it got hit like 50%, and then SPY was fine.
But check this out. Let me introduce some what I think is super interesting data into the conversation. All right. So what we're looking at right now on the screen is the number of visitors to Benzinga.com from 2019 through today. Right. So basically, 2 years of data. OK, going along. Right. We're getting 1.5 million, close to 2 million people visiting Benzinga.com. Boom. COVID happens. Right. That number goes from 2 million to 5 million, like that in a month. Right. Explosion of interest. I'm going to zoom this out and show you guys what happened when GameStop took place. Right. That COVID bump is like almost, it's not non-material, but it's almost non-material. Right. All of a sudden it goes from, 5 million to 13 million. A month visitors. And here's what surprised me, right? But it was February, you had the ass into January, and then February was the main month where GameStop was going crazy, right? I expected March to be back down to like, okay, it's just sort of where this new COVID normalcy level is at. But the fact that we had GameStop happen, where literally it's the number one story on CNN for a week. And the amount of readership, which I use as a proxy of interest, stayed as high as it was in March as February is I think it's the most bullish thing that I've seen to, okay, these people haven't gotten totally shaken out or just lost interest, just naturally lost interest.
But my point is less a matter of like whether or not they win or lose on the individual stocks that they pick than the idea that they're going to help shape what the market looks like in the future. And just by definition of how many people, the sheer number and volume of people, it's really cool that you showed that. That, like, a lot of people wouldn't show that. And I respect you for doing that. Actually, people get really weird about their data. But that exemplifies exactly what I'm talking about. Whether it's because of institutional money that wants to take advantage of those people, or those people themselves moving the market, those people are going to move the market one way or the other. Retail is here to stay, and it is going to move money. And, whichever side of the trade you happen to be on, I do think it matters. But less so than the fact that there's going to be appeals made to these people, and stocks and CEOs and companies are going to start trying to attract these dollars. Why wouldn't they?
Right. And I think the choppiness of the market over the last month or month and a half might have helped flush some, I guess, newer traders out. But, I know Terrible Trader said he doesn't really like talking about the cyclical or the cycles or the cyclical nature. But I think if we see this, what a lot of economists are calling for as far as like a period of 6 months or a year of extended growth, the market growing, doing well, then I think, over that time, as opposed to the volatility that we've seen throughout the COVID, just a slow up march in the market, if it's climbing, then I think we'll see that slow growth of retail traders coming, fluxing back into the market. And this time, maybe it'll be a little bit more stable, something where if people are just like, in my mind, if people are just throwing $100 on the first every month into the S&P or something like that, like something like that, you're not on Robinhood every day trying to trade stocks, whatever, and the market's going up, then who wouldn't want to be in the market? Why wouldn't people want to come in and stay?
Yeah, and I know we are all in the content creation game, so it's hard for us to understand exactly what the dollar correlation is to all this attention. But just because people stop paying attention to the market in their everyday lives, which is inevitable anytime there's a huge influx of attention, doesn't mean that they're not going to continue to put their money to market. Investing and getting rewarded for investing is in and of itself kind of addictive. And I think that a lot of people are going to stay around, even if they don't engage with, websites or open more accounts necessarily.
So let me add to my argument about how this is not necessarily any different or a revolution. I agree with you, Hopt, and everybody else. There's definitely an influx of retail traders. That's undeniable. But in terms of people's interest in the market, like the general people, that's always been around. There was a book I read called The Psychology of Trading that was written I want to say late 90s, early 2000s. And in that book, they discussed how there's like a saying that baseball is America's favorite pastime, but statistically more people are involved in the market than people that are baseball fans. So this book was arguing that actually the stock market is America's favorite pastime. And so when we think about how the world has changed with social media and the internet, maybe what has happened is our perception of how many people are involved in the market is not necessarily skewed, but we can see the fact that there's all this participation as opposed to in the past, like in the 90s and before that, everyone was involved in the market, but you only knew about your friends that liked the market. You only knew about like the people that you personally knew. Now we have platforms where we can actually see random people, posting loss porn or vice versa, gain porn on Wall Street Bets. My argument is that there's no revolution. It's just simply an influx, and these influxes happen all the time. And yeah.
Awesome. And what about stocks? Any stocks we should talk about?
Yeah, I wanted to talk about Coursera, the IPO from yesterday. That thing is absolutely taken off.
Can
and
you
we COUR.
COUR. All right, there it is. I'll drop it in the chat too, guys.
I mean, this one, it's different than Chegg in the sense that it actually offers courses. And it's different than, there's another website out there that does coursework as well. It's different than most ones because it actually partners with major universities and state universities and international universities to offer these courses. So this one is, and it didn't, what I really respect it for is that it didn't price itself out for the IPO. The market cap is still reasonable.
If that valuation is fine.
Yeah, that's what I think.
Look good, etc.
Yeah, exactly.
Okay, it's an interesting one. And we actually use this one at Benzinga. In that part of our business, right, we get like affiliate commissions when we drive, when our users, right, who are on Benzinga.com go over and purchase things, whether it's you're opening a Robinhood account or whatever it may be. And one of the things that we push users over to is, hey, here our editors went through, here are a few stock market courses that we think are really good. And then Coursera pays us when the user comes from us and goes and buys that. So it's awesome. An interesting business. I love these ones that I know intimately. I've talked to them. I've structured deals with them, etc. I didn't even know it was going public. It's bad on my part, but I got to look into this one.
And then there's another one, INVU. Let me see if I can find this on my list here. This one, yeah, this one's OTC, but it's really interesting. I mean, this is more of like a technical play, in my opinion. My dad charted this and brought it to my attention at about 17 cents.
Okay, what should I go to daily candles? Whoa, holy crap! Wow. All right, look at that, guys.
And yeah, that's a move.
That's a move. Okay. Got my attention there. So I mean, is the jig up, or are you at with it?
Probably, yeah, unfortunately. But these are the types of moves that we look for. So when we see the 50 and the 20-day MA like move over for a penny stock like this and the volume looks right, like we stayed with it after Monday and we ended up selling, I think, around 46 cents.
Okay.
So we didn't hit the top exactly, but that's
You almost top ticked it. That's pretty damn close.
it was moving very slowly though, so like we definitely could have held on, and then it catapulted up to 52 and then dropped back down to 42, which is kind of where it's at today.
This is a 2-day chart. Yes, that was definitely a nice grinder. Okay. And let me ask you this: how do you find a stock like that? Right there's a ton of penny stocks. You said you mentioned that the 20 and the 50 days look good to you, but how do you find them in the first place?
My dad runs a bunch of screeners. I like screeners that play off of volume and liquidity. So it's really important to me that the float's not too big, and it's really important to me that the volume is increasing. Okay. And besides that, I'm not looking at anything over $25 to do like a scalp or a day trade on. In general, that's kind of everyone has their own parameters. Those are my parameters. High liquidity, low float, high volume. That's the kind of stuff I like.
Awesome. I like it. And you're about to give us another one, I think. Can I cut you off?
I think those are the two that I was looking for. Ed likes Fiverr. I know Ed loves Fiverr.
Fiverr's a little bit more degenerate. So I don't want to plug Fiverr, honestly. If I'm going to plug something of,
you can say YOLO stock.
Yeah. I'll plug Activision, Electronic Arts, or Take-Two. I have high conviction that if you buy that basket of 3 stocks over the next 10 to 15 years and you average cost basis, gaming is to the moon, and it's very obvious.
Wait, I loved. I think Moses last time he was on had a good value fundamental pitch for Take-Two.
Take-Two, yeah. He started looking into it after I pitched him Take-Two.
Oh, so it was your pitch, right?
Yeah, Take-Two. Because when I started trading, before I lost money for 4 years, like being an idiot in the options market, I started looking at companies that I knew, and Take-Two was one of them, and so was Nvidia. And Nvidia at the time was $25, and Take-Two at the time was also $25. And so I reached a point in my life where I kind of realized, I'm like, wait a second, I've lost thousands of dollars on weekly SPY options while watching companies that I know and understand and use go up tenfold. What am I doing? I had a moment of realization when I realized what am I actually doing? My goal isn't to get rich tomorrow. My goal is to make money, period, and be comfortable in the future. So Take-Two is a company that it's just going higher, and so is Activision, so is EA, and maybe one of them goes bankrupt. That could happen. Maybe one of them goes under, but one of those 3 companies will make so much money in the future and have such large influence on the amount of time we spend playing in their games. Yeah, for sure, man. It's bullish gaming.
And I love what you're saying too, right? The 4 years of losing money, like something that I say, and I love to say and love to get hated on for saying, is if you have not blown up an account yet or suffered losses, you will.
You will, for sure. For sure.
I blew up 3 is what it took me. I know some people are quicker, some people are slower. It took me 3 that I blew up, and I've now got a good 7 years or so that I haven't blown one up.
Nice. No, it's awesome. I hope to get there one day myself. Good for you.
All right, guys. How do people stay in touch?
You guys can find us on Twitch. We're on The Next Trade. We go live every every Wednesday and Sunday night. And then you can find us on Ruby Capital on Patreon, patreon.com/RubyCap, where we have our pre-market show every weekday, Monday through Friday, 8:30 till 9 at least.
Perfect. All right. And producer AB, will you drop those links in the chat for everyone?
Thank you very much. Appreciate it.
Awesome, guys. Thanks for coming and hanging out today.
No, thanks for having us on, man. Good chats, everybody.
We'll see y'all on Monday, right?
Yeah.
Yes, absolutely. Sir. Yeah, RubyCap Monday.
Boom.
Yes, sir. All right. We'll be talking over the weekend about that, getting all details linked up for that.
Sounds good,
man.
Thanks again, man.
Y'all enjoy the long weekend.
You too. You as well.
Take it easy.
All right, producer AB. 2 things before we go. Got to move along. I'm going to share my screen again. Trimble. Let's go. We hit this one earlier in the week. We bought the stock live on the show heading into the breakout. It was the only trade that we made this week, the only new position that I put on. Stock was resting right up against here. It is, in fact, breaking out. If you're in this one with me, I'm letting it ride through the weekend. When a chart looks like this, it's at the high of the day right now. I'm going to let it ride. And then of course, I got to do my Voyager check. VYGVF keeps going, baby. Come on, all-time high on Voyager. I'll take that. And the very last thing of the day of the week, maybe we should do a show tomorrow, producer AB, even though the market's closed. Chat challenge every week. Zinger Nation, head to head, trying to figure out who is the best stock picker in the chat, guys. You drop in your guesses. The winner this week was getting a Benzinga Pro. Spencer Israel's looking at me. He's pissed. No more Benzinga Pro giveaways, he says. Well, shout out to Keith in the chat. You picked the best stock of the week, MMEDF. I believe that is MindMed. Overall, not a bad basket that everybody picked. We definitely got some dogs in here, right? Anybody who picked Genius Brands got.
What's the actual cutoff for a small cap stock?
The technical definition is 2 billion and below. Okay. We said 5 billion is what I said we'd allow. I said we'd allow 5 billion and below when we set this up, right? We expand the pool a little bit. Keith, there he is representing the chat. Power Hour at Benzinga.com. Drop us a line. If you're not Keith and you want to drop us a line, do that too. But without further ado, producer AB, I think it's time to turn it over to Miss Catherine Ross.
Let's do it.
All right.